Good morning, Dipti.
Good morning.
Morning, ma'am.
Morning.
Good morning, ma'am.
Hi,
Good
Dipti, how are
morning.
you?
Hi, how are you?
Good, good, good.
Dipti, why you constrain yourself in 1/3 of the screen?
Sorry?
I can see only 1/3 in the screen. You put the border in the both the sides.
I don't know, it happened. I'm joined through mobile.
Okay. Maybe that is the reason.
That is the reason.
Yeah.
Okay, friends, we'll start here. Today's our session on SS3. And of course, you know, this is a series we have started for Secretarial Standard to create importance and the awareness and the clarity of Secretarial Standard, so that as we, as a Secretarial Standard Board ex-member, we don't say ex-member, I am ex-member, maybe there are other members, we always would like and always persuade people to follow that, because that saves the skins of law, CS, whether in employment or practice. Why SS, as a professional CS, we should understand the importance and understand and have a clarity about standard, no confusion. And the purpose of this series is that only. And friends, we keep on telling, not only in India, overseas also the same is required, because it's a basic concept of meeting, how it should be conducted, so that sanity of the matter and the matter the process of conduct, and entire, it can create a documentary evidence and legal evidence in the court of law. That is the reason how this all process is carried out, and including certain, in that slowly we develop about the dividend, related party, the relevant provisions of the Companies Act, so that we are perfect in executions. And so today's our topic is SS3, and we have with us Miss Hema Kumari. Welcome, Hema. Hema?
I think there was
Hi.
some network issue. Hello.
Yeah, sorry. Yeah, so Miss Hema Kumari, welcome to our session. To give brief introduction of Hema Kumari is a fellow member of our ICSI and a law graduate from CCS University. She has over 16 years of experience in legal compliance and secretarial matters of listed company. Currently, she is working with DAN Network Limited, a group company of Reliance Industries Limited, as a company secretary and compliance officer. Prior to DAN, she was associated with JK Group. Welcome, Hema, and thanks for your time here. And I will request Mr. Sudhakar to say a few words on the topic, Mr. Bala, and then we can hand over to Hema for 2 words, and then the presentation can be started. Thanks a lot.
Thank you,
Thank you,
ma'am.
Dipti. The only thing what I would like to say is that SS3 is recommendatory. It is not mandatory.
Mandatory, right?
But it doesn't change the flavor, whether it is a mandatory or recommendatory. Ice cream is always an ice cream, according to me. And so that's why in SS3, there are a lot of things which are there, which are not there in the Companies Act, because these provisions are to raise the bar of corporate governance. If you read SS3 or the guidance note, you will find certain provisions which are not there in the Companies Act. But these have been brought in only with one motive, that when they become the standard, there are similarly in SS1, SS2 also, a lot of provisions are there which are not there in the Companies Act. But when they become mandated and become part of the law, they are coming to the rescue of the directors and the company secretaries. Similarly, here also in SS3, we have suggested certain measures which were not there in the Companies Act. This is going to increase the financial status of the company, and also going to help the board of directors whenever they are declaring the interim dividend or the recommending the final dividend. So I will give a pause here, and as the presentation progresses, wherever I have to intervene, I will give the clarity there. And from SS point of view, what was the rationale when we have suggested certain things, that myself and Dipti will give you. Bala sir, you may express your words. Thank
Just 1 minute, Mr. Bala. I forgot to introduce Ms. Geetanjali Aggarwal,
Good morning to
main
all of
person
you.
who is presenting. So Geetanjali, welcome also. Yeah, Mr. Bala.
Good morning to all of you. I have a great pleasure in welcoming you all on your own behalf and also on behalf of Mehta Mehta. As you are aware, as Sudhakar puts it, this particular standard is a recommendatory in nature, not mandatory. For last 2 sessions, we discussed SS1 and SS2, which were actually mandatory. As he rightly put it, any rules and regulation which is introduced recommendatory or mandatory, in the real spirit, if it is followed, the companies can definitely excel in the corporate governance areas, and the company gets a compliant company, and people would like to associate with that company. That is what. Coming to this particular subject, dividend, there are various things are involved in nitty-gritties, the kinds of dividend, dividend on equity, dividend on preference. Again, when we come to the preference share, cumulative, non-cumulative, then again, if the company is in a loss-making situation or inadequate loss-making situation, can the company declare dividend? If so, what extent? Then in case of the arrears of dividend, what happens? So these are all the various nitty-gritties which are there. And not only that, when we talk about the listed companies are also separately covered under the listing agreement as such, followed by the LODR regulation. They have to comply with this separately for that, for the listed companies as well. And above all, there is a disclosure requirement is there in both in Companies Act as well as LODR regulations. Because as per the LODR regulation is concerned, the companies are mandated to have a dividend declaration policy, which is to be formulated a company which is also there actually. So the really thing is, what is happening is more and more regulators are concerned about having more transparent disclosure to the investors, to the stakeholders, so that people know what is the company is doing, what is the company's plan, how the company is going to go, etc., so that they can take a informal decision from their end. That is one part of it. The second part of it, as we come to the professional, as a company secretary, whether it is in employment, whether it is in practice, there are a lot of compliances which are actually called for. Any non-compliances which is definitely viewed very seriously by the regulators. Because although we talk to prosecution, etc., and all thing, it happens actually. It is not happening. I do not know if you have actually seen about yesterday, day for yesterday, the newspaper, there was a very rare case has been actually published in terms of one of the company in Hyderabad, where the cost accounting records were actually not submitted, where the managing director has been imprisoned by the regulator. So to that extent, the non-compliances definitely get into the problem to the company and as well to the directors. Whereas the company secretary is the person who is really a compliance officer of the company, who is supposed to take care of everything and ensuring. It is not that he himself is going to ensure everything. It is not possible also. That is why if you look at the function of the company secretary, it says he is supposed to ensure the compliances under the Companies Act. Of course, under the listing agreement, because he is designated as a compliance officer. But in respect of the other applicable laws, he has to definitely guide to the management, namely the board of directors, and ensure the total compliance in respect to the company. That is his responsibility. So being that so, the company secretary has got a greater role to play in continuously keeping updated the company's management. What are the changes, what are the amendments which are actually happening, what is required to be done, is the company is prepared, or if it is not prepared, what are the things which are actually required. When we talk about the dividend, it may appear, what is there in the annual general meeting, we declare dividend and we pay it out. Okay, that appears to be simple. But when we come to various nitty-gritties, I come across in my real life. When the Indes was introduced, it was actually talked wherever the preference company, so dividend payment and the preference share will be a charge to the profit and loss account. Many company secretaries were of the view, since it is a charge to the profit and loss account, there is no need for approving the dividend in case of the preference share. That was the view which was actually discussed. In fact, Sudhakar will be able to say when the SSP board he was there, when this matter has been discussed, has been amply clarified in our secretarial standard as well as what is it, because dividend comes after the profit is arrived actually. So from the profit it is appropriated. Anything which is appropriated, it requires the approval. If it is the interim dividend, it requires the approval of the board of directors. If it is the final dividend, it is recommendatory by the board and finally approved by the shareholders. So this is the issue here. So I think our presenter will be taking through all this nitty-gritty. And again, there is certain question which are also there is actually settled whether interim dividend is an authority of the board to declare, whether it requires approval from the shareholders. That is another thing. Yeah, you may argue this way or that way, but ultimately, in the best interest of the corporate governance in the annual general meeting, normally many companies do that. Many companies form a resolution in such a way that to approve the interim dividend already declared by the board of directors and approve the recommended final dividend. That is the way it is actually done. That is what. Second thing is, again, this money is being to be paid to the shareholders well in time. That is the crux of the matter here. Because the moment dividend is declared, the money should be separated out. It should be available in the separate bank account. That also specified license comes. There are case laws which will be discussing it. Even by delaying 1 or 2 days, the regulators are being very seriously. The company have been actually penalized. I think she is going to discuss one of the things Hema will be discussing on that. So there are various integrities which are actually involved. And we have 3 people, eminent people today, Dipti and Sudhakar, who was part of the SSB board, and Geetanjali, who has been working with the Reliance group, whose practical experience, because almost 1.5 decades experience what she has got. And I respect today's youngsters who are well informed, they are well known, they keep updating the knowledge, etc. and other thing and done. We will know the nitty-gritties. And I will also invite any comments, any sharing, etc. from the participants here who are experienced in this, so that it will be a great learning today on this particular subject. As Sudhakar puts it again, I would also, at the cost of the repetition, like to re-emphasize all the secretarial standard. Not only one, they have formulated almost 10 standards. One day or other, it's all going to be mandatory. It is better that we follow voluntarily today in the real spirit. That is what I would say. With this, I'll ask Hema to take on the president.
Yeah, Hema, please. 2 minutes, for your view on the topic, and then we can start the presentation.
Thank you, ma'am. Very good morning to all of
Yes.
I would like to thank Mehta and Mehta team, especially Bala sir, Dipti ma'am, Sudhakar sir for inviting me here. It's really an opportunity and privilege to be here. As we have already,
Very much.
As we have already seen and heard that it's SS3 is recommendatory in nature, but though it's recommendatory in nature, but payment of declaration and payment of dividend being very important corporate action, it's always preferred to go through the SS3, especially for the fresher company secretaries, because Institute has done a great work combining all the provisions under the Companies Act, SEBI in one place. It not only provide guidance on the declaration of dividend and payment, but also the guidance note has been issued by the Institute of Company Secretaries, wherein they have covered all the procedural aspects. So it is a very good help and guidance to the fresher company secretaries, and also dividend being an important corporate actions. All the procedures has been enunciated in this SS3. So I'm looking forward for a great enriching learning session today. And with this, I hand over to ma'am.
So good morning, everyone. My name is Geetanjali. I hope I'm audible to everyone. Welcome to yet another learning session by Team Mehta Mehta. it's a beautiful sunny Saturday morning, and it is my extreme pleasure to address such wonderful audience with our very esteemed, very learned team bench of panelists. So today is our third webinar in the Secretarial Standard Month series. And for all those who could not attend the first two webinars for any reason, you can access the same on our YouTube channel, Decoding Corporate Laws with Mehta Mehta. Also, you can follow us on LinkedIn for latest regulatory updates and information on all our upcoming webinars. So let's kickstart our session for today. Before we deep dive into the technical provisions, I would like to discuss a little background about Secretarial Standards Board, because we can't directly jump onto the presentation as per the good storytelling rules on the lighter note. So ICSI constituted Secretarial Standard Board in year 2000 with a vision to standardize and harmonize the secretarial practices in the corporate sector. Secretarial Standard Board is a very unique body in terms of its representations from such eminent bodies, including ICSI, major industry associations like FICCI, CII, representatives from various exchanges, authorities like MCA, there's RBI, SEBI, NSE, BSE, and also the Institute of Chartered Accountant of India and Cost Accountants of India. So as Hema ji very rightly pointed out, the secretarial standards are a very well formulated standards with opinions from all the major organizations, and it is always good to refer to those while going with the procedures. So Secretarial Standard 3 is the Secretarial Standard on dividends. There are a few things to remember throughout our discussion. So as Sir Sudhakar sir, Bala sir, and Hema ji also pointed out, compliance to Secretarial Standard 3 is not mandatory, but yes, it is recommendatory, to have a proper set of procedures to ensure that we are following a good corporate governance. Second, if Secretarial Standard is in contravention with any law, the law shall prevail. The standard became effective from 1st January 2018. Secretarial Standard 3, it sets out the principles in relation to the declaration and payment of dividend and all other incidental matters. Secretarial Standard 3 on dividends is applicable for both equity and preference shares. They are also equally applicable to interim and final dividend unless specifically mentioned. However, Secretarial Standard 3 are not applicable to company limited by guarantee, not having share capital, and to the dividend declared by companies in liquidation. Now, let's understand the term dividends. Dividend is basically a return on investment made in share capital by the company. Whenever we invest in the equity shares of the company or preference shares of the company, we are expecting some return, and which we get in the form of dividends. If we go to the definition of the Act defines dividend as share of profits of the company that is divided amongst the members, hence the term dividend. Now, the dividend includes interim dividend. However, bonus shares cannot be considered as dividend. Also, Section 8 companies are not allowed to pay dividends to its members.
Because Section 8 company is basically a charity company and it is not for profit sharing. So naturally, Section 8 is out of it. I think everybody is aware of it. Yeah.
Also, I would like to add on that since while declaring bonus shares, there is no outflow of the profit of the company. It's only the capitalization of profit which is given to shareholders in form of bonus share. So this bonus shares are not termed as dividend as per SS3.
Thank you for your views. So there are a few more terms that we should understand before deep diving into the Secretarial Standard 3. Final dividend. There's a difference between final dividend and interim dividend, already very well articulated by Bala sir. So I'll just add a few things to it. So final dividend is the dividend recommended by the board of directors. However, it is approved by the members at the annual general meeting. Interim dividend is recommended by board of directors at the board meeting. So the members do not have any role to play in declaration.
Not recommended, dividend is declared. You put it correctly.
Yes.
Yeah. Dividend is actually declared by the board. And whereas the final is actually recommended by the board and approved by the shareholders. Yeah.
Free reserves. Free reserve means the reserves available for distribution as dividend as per the latest balance sheet of the company. Now, there are few things that will not be treated as free reserves, which are any amount representing unrealized gains, notional gains, revaluation of assets, whether we show them as reserve or not, they will not be treated as free reserves. Any change in carrying amount of an asset or of a liability, recognizing equity, including surplus in P&L account on measurement of asset or a liability at fair value. The company may, before declaration of dividend, transfer a particular amount to the free reserves. Whatever the company, consider necessary, appropriate, it can be transferred to free reserves every year before declaring the dividend after getting the final profits. Now, which amounts are available for distribution of dividend? So the sources of dividends are, first of all, profits for the financial year for which dividend is sought to be declared, or the profits for any previous financial years which remain distributed. However, we need to provide for depreciation before declaring dividend out of those profits. Second, if there is any money which a central or state government has guaranteed to be distributed as dividend, can be used for the same purpose. Now, dividend cannot be declared unless the company sets off carried over previous losses and depreciation in the previous year against the profits for the current year. So if there are any previous losses or depreciation which had not been provided in the previous years, shall be provided in the current year before declaration of dividend. If there's a non-compliance on behalf of the company in relation to repayment of public deposits or any interest thereon. Now, this particular provision is applicable only for equity shares. The company can provide dividend on preference shares even if there's a non-compliance in relation to repayment of public deposits.
Here, actually, what happens is, in case of the preference share, the dividend is already a committed one, actually. Because you might have seen, whenever the preference share is actually issued, it is issued 8%, 10%, 9%, 12%. It is actually committed already. It is nothing but preference share is actually nothing but, as termed in the index, it is a long-term borrowing. It is to be refundable because no preference share can be issued beyond the period of 20 years, within the period of 20 years, barring only certain classes of company, infrastructure companies, etc., where they are permitted to issue more. It is restricted only to 20 years. That means the long-term borrowing up to the maximum period of 20 years, where the dividend is actually paid for them for the borrowing. So it is a pre-committed amount. So when this is a pre-committed amount, naturally it has to be paid, but the only thing is what happened, it is paid out of the profit. So that is why the concept of, the pre-committed amount, whether it is to be paid cumulatively, suppose 1 year the company is making a loss, then in such a cases, whether it can be carried over paid in the next year. If it is the terms is like that, if it is agreement is like that, if it is the cumulative preference share, yes, naturally, if the particular year company is making a loss, if they are not able to declare, they have to make a provision. They have to actually disclose in the notes to financial accounts and financial statement and under the current liabilities and provision as well, saying that arrears of dividend which is payable again when the company is in the profit-making situation. That is the difference here. Because equity share is simply sharing a profit. But in case of the preference share, it is the pre-committed amount which is actually payable. It is actually, as said in the index, it is nothing but a debt which is actually chargeable to the profit and loss account. Yeah.
Thank you, sir. Thank you for the clarity. Now, company cannot declare the dividend if there's a default in redemption of debentures, or there's a default in payment of interest on debentures, or creation of debenture redemption reserve. If there is any default in redemption of preference shares or creation of capital redemption reserve, if a payment, if there's some dividend which was declared in the current or previous years, but it has not been paid, if there's some term loan to bank or financial institution, or any interest which is due to be paid and company has not yet paid it, in case of all these defaults, company cannot declare the dividend. Also, company will not declare any dividend during the extended time, if any time, granted by a court or quasi judicial body for the repayment of all the liabilities that we discussed in the last slide. If there has been some extended time provided for paying off those liabilities, company cannot declare any dividend during that extended time. Now, we have discussed the sources where we can declare the dividend out of, but there are few things that cannot be used for dividend. Few sources cannot be used for dividend. That is securities premium account, capital redemption reserve, revaluation reserve, any amalgamation reserve. If there's a profit on reissue of forfeited shares, if there's a profit which was earned prior to the incorporation of the company.
Geetanjali, go to the 1 minute. Go to the previous slide. Previous slide. Yeah. See here, I would like to bring to the notice of the participants that under the Companies Act, a dividend shall not be declared when there is a default in relation to the repayment of deposits. Whereas whatever the other things are there, which Geetanjali has mentioned, like redemption of debentures, redemption of preference shares, payment of dividend declared, and repayment of any term loans. If there is a default in these 4 or 5 things, that is not mentioned in the Companies Act. But go back, previous. See, because when the Act says there is a default in repayment of deposits, it might be a kind of I don't know why that Act itself has not prescribed, because all the other defaults are also more or less financial defaults only. When you are not redeeming the debentures, again, how can you declare the dividend when you are not making the payment of interest on debentures, when you are not redeeming the preference shares, and you are not making the payment of dividend declared earlier, and again you are declaring dividend? I don't know why that kind of restrictions were not imposed in the Act itself, but SSB thought it is prudent, and as I mentioned to you, one of the objectives of the SS is to raise the bar of corporate governance. That's why these provisions have been introduced. But as SS3 is recommendatory in nature, if any company is, despite the fact they are defaulting in debentures, still they can declare the dividend under the Act as on date. Go ahead.
Thank you, sir. Thank you for the...
One more thing I would like to share at this point of time. When we talk about the interim dividend and the final dividend, the carryover balance of the profit and loss account. Generally, if you actually look at the balance sheet prior to some 30-40 years back, what people used to do is they used to transfer everything to the general reserve. Nothing they used to keep in the profit and loss account. After they declare the dividend, the entire amount, what is there, balance is transferred to the general reserve. But when it comes to the interim dividend can only be declared from the current year's profit, that too also up to the quarter in which the accounts are to be prepared, the depreciation is fully charged, the expenses are fully charged to the things, and what is the probable estimated profit, out of that only it can be declared. But if the carried over profit and loss account is still kept, not transferred to the general reserve, the balance is there, then that can be utilized for declaring the interim dividend. But once the money is transferred to the general reserve, that can never ever be used for the declaration of the interim dividend. That can be utilized only for the final dividend. Why I am telling is, the company where I was working, I spent almost about 30 years on one single company. The company was a very conservative company. So they said everything transferred. One particular time we had, I think, and company has been extremely making a good profits. They have been declaring dividend like anything like 350, 400, 425%, etc. One fine day, management somehow thought, can we actually utilize the general reserve and give more dividend? That is the question which actually came. As you are knowing, so long as company is a profit-making company, drawing the general reserve is not permitted actually as per the law, unless until there is a specific approval is given by the central government. I brought to the notice to the board members. But somehow they said, why are you saying if the government approval is required, is our own money, get the approval, all those things which has actually happened. But ultimately we did, nothing happened. Government is refused because they said you are already making a adequate return to the shareholders. So your request to draw the general reserve is declined. That's sort of the reply we got from the government. But still the management want to do something, but it has been done differently. We actually got that time in 1956 Act, we have gone to the court of law and section 394, compromise and arrangement with the shareholders. We drawn the general reserve money. The money has been actually unwanted money, which is lying with the general reserve, is refunded to the shareholder, the excess money. That is the way we have gone about it. We have distributed the cash at that particular. That's a different story. But the purpose is, if the money.
Thank you, sir.
Just one thing I would like to add here, Bala.
Yeah.
There is under that 56 and even in the current, there is a law, particularly at the end of the year, if you want to transfer from general reserve to P&L for declaration of dividend, that rules is there, no? Subject to if you are declaring dividend, which is average of last 3 years.
No, that is actually what you are talking is the company wants to declare the dividend in case of the inadequate profit or loss-making situation.
Absolutely. So what I am referring to is, suppose my profit is 100 and if, let's say, by way of declaring dividend, I need 150, then I have to check whether I can transfer extra 50 required from general reserves to back to P&L. So my experience with my client also was that I would tell them, except earlier there was another rule which says to declare dividend, you have to minimum certain percentage you have to transfer beyond 10%. Up to 10% dividend, no transfer, then 12 to 12.5, 2.5, 15, etc. So you transfer only minimum from P&L to general reserve. Rest all you accumulate in P&L, which can be utilized for interim dividend. And even for the final dividend also, you don't have to redraw from general reserve subject to restriction.
No, we became prudent only after this. No, after 40 years of the company's existence, we become prudent later.
Right, sir.
Till then we were very conservative. So
yes.
We have been doing that. That is why I shared that.
No, I agree with your concern that earlier that was the difficulty if you transfer everything.
Yeah.
And as you said, particularly for interim dividend, you are left with nothing. If you are short, you can't declare. But final dividend still you can declare, provided you are eligible to have it transferred from general reserves back to P&L. But subject to that.
True. Yeah, correct. You are right. Thank you.
Thanks for the views. So I'll just summarize this slide for the sake of continuity. Now, yes, the company cannot declare dividend unless they have, provided for previous losses and depreciation. The company cannot declare dividend in the event there is non-compliance in relation to repayment of public deposits. However, as for the purpose of good corporate governance prescribed by Secretarial Standard, company ideally should not declare dividend, though it is not barred by the law. Company should not declare the dividend in the event of default in redemption of debentures interest, redemption of preference shares. If there is unpaid dividend, if there is a payment, there's the dividend which has to be paid and has not been paid. If there is any repayment of term loan to any bank is pending. Now,
Geetanjali, if you can just move to immediate previous slide.
this one?
This one. Here I would like to add on that in case some reserve is created out of profit of the company, for example, debenture redemption reserve, and its purpose is now utilized, that is the debentures are redeemed. So that debenture redemption reserve can be utilized for payment of the declaration of dividend.
So we'll be renaming the reserve, will not be naming it as the debenture redemption reserve. We'll be renaming the reserve like general reserve or something.
Right. And also if there is some profit on account of sale of fixed assets, and if that profit is realized in cash. So in case there is no contradictory provision in memorandum or article of association of the company, then that can also be realized. Thank you.
Thank you for the additional information. Now let's discuss interim dividend. Interim dividend can be declared out of surplus in the P&L account. It can also be declared out of profits of financial year in which such dividend is sought to be declared. Now the profits that we will consider will be till the end of quarter immediately preceding the date when such interim dividend was declared. However, interim dividend cannot be declared out of free reserves. I'll clarify the second point a bit. Say, for example, the board recommends interim dividend today. We are setting in the month of February. We shall consider the profit for the quarter ended till December 2022, and then we shall consider that profit for the purpose of interim dividend. Now, the authority for declaring the interim dividend is the board of directors of the company. When we can declare interim dividend, we can declare interim dividend during any financial year or at any time during the period from closure of financial year till the holding of annual general meeting. Now, there are few things that we need to consider while declaring the interim dividend. So basically, the financial results for the period for which interim dividend is to be declared shall be considered. Financial position of the company should justify and support declaration of such dividend. In the event of loss, in case the company has shown loss till the last quarter, when the dividend is when the dividend is declared, the immediately preceding quarter, if company is showing loss, interim dividend shall not be declared at a rate higher than average dividend declared during the immediately preceding 3 financial years. So if I'm talking about this year, financial year 2022 and 23, I'll have to consider 21-22, 2021 and 19-20, and I'll take out the average of the dividend declared during these 3 years, and I'll make sure that interim dividend is not exceeding that average. I hope I have made it clear.
1 minute, Geetanjali, let me explain this. Now go back. Then not this one. Next slide. See, as Geetanjali has rightly mentioned that during any financial year or at any time during the period from closure of the financial year till holding the annual general meeting, interim dividend can be declared. This means for the financial year 22-23, interim dividend can be declared at any point of time during the financial year 22-23. And also you can declare the dividend in respect of the financial year 22-23 up to September 23, provided you are holding your AGM in September, August, whatever it is. Number 1. Number 2, as far as the resources for this interim dividend is concerned, there are 3 resources are available. Number 1, from the profits of that financial year. That means you can pay from the profits of the 22-23. In case you don't have adequate profits, but you are having some surplus in the previous profit and loss account, that is earlier years profits are there, you can pay from that also. And because it is not a reserve, so you don't need, that restriction is not applicable to you because it is surplus in the profit and loss account. After Companies Amendment Act 2017, there is another resource has also been given. That is, I can also utilize the current year profits. That means what? Suppose in respect of 22-23 financial year, I can declare interim dividend, say in the month of July or August 23, from the profits what the company has earned from the first quarter of the financial year for 23-24. That means April to June 23, that is the first quarter for the financial year 23-24. I can utilize that money also. Number one. Number two, this interim dividend can be declared with respect to the previous financial year, that is 22-23, provided the accounts are not adopted by the shareholders. Once the accounts are adopted and approved, you cannot pay any interim dividend with respect to the previous financial year. You can go ahead.
Thank you, sir.
1 minute, sorry. One more thing left out. Just go back to the, see, in the last paragraph, what it says is in the event of loss, interim dividend shall not be declared. Whenever you are declaring an interim dividend, in the previous quarter, if there is a loss, it is not in the event of loss. In the previous quarter, if there is a loss, that interim dividend shall not be declared at a rate higher than the average dividend declared during the immediately preceding 3 financial years. That is how this is to be viewed. Yeah.
Now, the case of inadequate or no profits. In the event of in the event when there are when there are inadequate profits or there are no profits, first of all, company can only declare final dividend out of free reserves. In that case, interim dividend cannot be declared. There are few things which have to be taken care of while we are declaring final dividend out of free reserves. I'm highlighting final dividend out of free reserves intentionally again and again so that there's no doubt regarding what kind of dividend can be declared out of free reserves. So there are few things that we need to take care of. The rate of dividend declared by the company will not exceed the average of rates, the average of rate of dividend declared by the company in the immediately preceding 3 financial years, which we have already discussed in detail. Sudhakar sir very well explained this to us in the last slide also. The total withdrawal from the accumulated profits will not exceed 1/10 of paid up share capital plus free reserves as per the latest audited financial statement. Whatever amount is withdrawn shall be first utilized to set off losses. If there are any losses, it will the amount withdrawn will be utilized to set off those losses, and then it will be used to pay the dividend. The balance of free reserves after the withdrawal, after the amount has been withdrawn, the balance of reserve shall not fall below 15% of the paid up share capital of the company, again as per the latest audited financial statements. Now, all the above conditions, they shall not apply to any government company in which the entire paid up capital is held by central government or state government or a government company or combination of any of these. Now let's discuss about declaration of dividend, the procedure and legal aspects.
Just 1 minute, Geetanjali, in respect of that interim dividend, 1 or 2 points more I want to bring it to the knowledge.
Yes, sir. Please.
Number one, in case of interim dividend, after the 2017 Amendment Act under subsection 3, the board is empowered to declare interim dividend. So prior to that, there was a kind of the act, there was an ambiguity, you can say, in the act, whether the board can declare the interim dividend. If at all they have declared the interim dividend, whether the shareholders have to approve that as a final dividend or not, with a question mark. But pursuant to Companies Amendment Act 2017, when the subsection 3 was introduced, which has empowered the board of directors to declare the interim dividend, technically such dividend need not be approved, confirmed or declared by the shareholders. However, some companies as a customary, they are taking that also as a declaration of dividend. What they do normally is that suppose if the interim dividend is 10% and the final dividend is 10%, they are getting it approval of shareholders for 20% as the dividend of that particular thing. Number two, also please remember that dividend can be declared by the shareholders only at the annual general meeting of the company, and dividend cannot be declared at any other general meeting of the company. The third thing I would also like to say is dividend, when it is declared, it becomes a debt. So in case of interim dividend, when that is declared by the board of directors, because earlier under the 56 Act, the board was clearly not empowered. So that time it was said that interim dividend is not a debt. But under the Companies Act 2013, post amendment of 2017, interim dividend declared by the board is certainly, it amounts to a debt.
Yes.
Go ahead, Geetanjali.
Thank you, sir. Thank you. Now we'll talk about declaration of dividend. Let's discuss declaration of dividend here. So dividend, interim dividend is declared, is recommended by board. The dividend is recommended by board in the meeting of board. Members in annual general meeting cannot declare any dividend on their own. They can only approve the dividend declared by the director, by the board. So say, for example, if the board has not declared any dividend, till the AGM, the members cannot propose to declare dividend. Now, dividend cannot be declared subject to any condition. Say, for example, company cannot declare dividend in the form saying that company will be giving the dividend of 5% post repayment of loan. There cannot be any such conditions. Company shall consider all those liabilities before declaration of dividend. The dividend shall relate to the financial year and shall be approved by the members at the AGM after adoption of financial statements. It is basically recommended by the board and finally declared approved by the members at the annual general meeting only, as Sudhakar sir already told us. It cannot be done at any other general meeting. Members may decide to declare a lower rate of dividend than the rate recommended by the board, but not opposite. Members may also decide not to declare the dividend as recommended by the board, but again, not the opposite.
Yeah, as Sudhakar puts it very clearly, every company is obligated to have an annual general meeting mandatorily. There are only 4 items of the ordinary business which are specified to be transacted in the annual general meeting. One of the items is definitely approval of the accounts. The second item automatically is the declaration of the dividend. And the third item dealing with the appointment of the auditor and the remuneration, etc. The fourth item actually deals with the directors who are retiring by rotation for their reappointment. These are the only 4 items which are actually done. These 4 items is there. So it cannot be actually taken in the EGM because dividend is an item which are specified only at the annual general meeting. That is why Mr. Sudhakar has actually emphasized this. And again, coming to Sudhakar points, what he writes about the interim dividend and the final dividend. Yes, it is very clear in the Act. Interim dividend is actually approved by the board of directors. And there is no mandatory requirement as such. It should be actually confirmed by the shareholders. But many companies, even the company where I was also working, we always used to draft the resolution in such a way to confirm the payment of interim dividend aggregating to so much value and to declare the final dividend of so much, making a total dividend of so much for the company. That is the way we used to take as a good governance practice. That is what it is being followed by many companies. That's it. Yeah.
Thank you, sir. This I think provides the clarity on the whole purpose of why dividend is only declared at the AGM. Now, moving on. Dividend cannot be declared on equity shares for previous years. The board of directors, the members can only declare dividend on equity shares for current year. However, in case of cumulative preference shares, a dividend can also be declared for the previous years as well. In case of interim dividend, it will be recommended and declared by the board at the board meeting. We have already discussed this. I'm just re-emphasizing, reiterating this. In the event of interim dividend, members have no role to play. Also pointed out by our panelists here, dividend once declared, it becomes a debt and company cannot revoke it. What cannot be treated as dividend? Distribution of discount coupons cannot be treated as dividend. Bonus shares cannot be treated as dividend. Already very well explained by Hema ji, why bonus shares cannot be treated as dividend. These two things, we cannot treat them as dividend. Moving on, entitlement of dividend. Who all are entitled to receive the dividend?
Sorry to interrupt, Geetanjali, that last point, that we cannot declare bonus shares in lieu of dividend. Can we discuss on that? Because that could be certain gray areas. No, when do we say that this is a bonus shares have been issued in lieu of dividends? For example,
Yes,
if
sure.
company has not declared in last 5 years any dividend, can it issue a bonus shares?
It can issue bonus shares, but the company cannot say that bonus shares are in lieu of dividend. Bonus shares are bonus shares, which is capitalization of profits, but it cannot be considered as dividend. I think our panelists will be able to throw a light on this.
See, bonus share is actually nothing but it is the book adjustment. Both are actually appearing under the capital clause, which is actually owned by the shareholders. But share capital, already the proportionate shares are distributed, that is with the shareholder. So long as the reserve is sitting there, it is with the company. Now company decide, okay, I will actually move the below line to the above line, that is general reserve to the share capital. So I will actually give proportionate amount as a bonus share to them. That's all. So what happens? It is one of the items which is the non-cash items which actually comes to the shareholder from the company, and he doesn't get anything in the cash. When you say dividend is declared, dividend is always in cash. It is a cash benefit which actually comes into. So you cannot say non-cash distribution is equivalent to the cash distribution. So bonus can never ever be in lieu of the dividend.
So only while declaring, we have to be very careful not to say that we are issuing bonus shares in lieu of dividend. That will be a sufficient compliance.
You should not. It is not also.
Yeah, that's not allowed. That's what bonus shares cannot be issued in lieu. And so that's why practically even a case
where last time you are capitalizing the general reserve.
Understood. But technically, sometimes in the professional, we used to discuss that if particularly this happens in non-listed and private companies, what the company will do, they plow back all the profit and keep on expanding the business. And being a closely held, private limiteds are always a closely held like kind of thing. So from tax angle, they would see that now that we have a lot of profit, let us go for a bonus. So that has given a rise to the discussion, can it be treated that since you are not declaring dividend but giving only bonus, so that means bonus is in lieu of dividend. That was only a professional discussion. I just wanted.
That is where your role comes as a professional. You should tell them actually. That is where the professional has to play the role. Yeah.
No, so I remember that in one of the case, client said, if it is treated like this, it will be a problem. So I said, okay, let us one of the year we just declared a token dividend, and next year we went for a bonus, just so that you can't say that you are giving bonus without declaring dividend. That was additional precautions I took in that case when it happened. That's why I was interested in knowing what's the factual position, how everybody is doing that. But I agree with that with Bala's views that it is appropriation and nothing comes in cash, so it should not be treated.
Yeah, that is why, it's a cash benefit and the non-cash benefit.
That's true. Thanks.
Yes, Geetanjali.
Thank you, Bala sir, for answering to the query. Also, Nikhil ji, thank you very much for your active participation. Your whenever participant asks the queries, it always helps us to get deeper into the topic and get new insights. So thank you very much. Also, it lets us know that, you people are listening to us. So that's an added benefit.
Don't say you're listening, you're not sleeping.
Yeah. So we'll talk about entitlement to dividend. Now,
Geetanjali, I remember my grandson used to attend the classes on online.
yeah,
When the
we have all
topic is
been through this.
when the topic is not interested, he'll switch off the video. See, he's always, assembling some Legos. Where I say, oh, you're done like that, etc. No, they are just talking. It is like that. Yeah, go ahead, Hema.
Very true. Very true practical aspect of, doing things on Zoom, online platform. So yes. Now, dividend, who is entitled to receive the dividend? Only the registered holder of shares are entitled to receive the dividend. However, they can give the instructions to the company to pay such dividend to their bankers or to their orders on their behalf. But ultimately, only the registered holders will be the recipient of the dividend. When I talk about demat shares, all the members whose name appear as beneficial owners in the statement of beneficial ownership furnished by depositories. Now, the company shall fix a record date for the purpose of declaration of dividend, and the depository shall furnish a statement of beneficial ownership to the company, and whatever names are appearing on those on that statement shall be eligible to receive the dividend. For the physical shares, members whose name appear in company's register of members, after giving effect to all the valid share transfers. For this purpose also, there will be a book closure or record date, and company shall give effect to all the requests for transfers received till that date. And finally, whatever names are there in the company's register of members shall be entitled to receive the dividend. Now, preference shareholders shall be paid dividend before the equity shareholders. Obviously, as Bala sir told us that there is a commitment, while issuing the preference shares, and they are preference shareholders, they get some preference over the dividend. Areas of dividend on cumulative preference shares shall also be paid before the payment of any dividend on equity shares. I think somebody wants to say something here. Shall we move ahead? Yeah.
Yeah, just 1 minute, Geetanjali. In the previous slide, the first para, dividend can be paid to the order of the shareholder. So can I say instead of paying me, you pay to Mr. Bala?
You can authorize Mr. Bala to receive on your behalf, but ultimate benefit should be to you.
Okay. Now for the complication in the sense that TDS needs to be deducted. So TDS will be my PAN number, right? So post TDS net amount only will go to Mr. Bala.
Yeah.
Okay. Okay. That clears some doubts on that. Thanks.
I guess if any of our panelists has something to add to this, because this is an income tax
regarding TDS, it would be a critical situation to identify once the person who is going to receive the fund in his bank on behalf of others, but TDS is deducting on others' account. So how the accounting entries would be affected in the account? Can anyone highlight on that? Because how to reconcile the data?
I think
No,
somebody
what is exactly the question?
Sir, actually, Nikhil mentioned that he would, if suppose he is a shareholder and would like to receive a dividend, but he would like to give an instruction to the company that on his behalf, this dividend should be paid in others' name, like someone is his relative or that. So as per the provision of the income tax, TDS should be deducted the person who is actually beneficiary.
Yeah.
In name of shareholder, but as per his instruction, the amount of dividend is transferring to the third person.
Okay.
okay, as a beneficiary amount. So there would be a, we can say, reconciliation problem or situation. How it would be identify the person who is receiving the actual amount in his bank is not responsible for paying the income tax. Rather, the shareholder is liable to pay the tax.
No,
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 I'll
listen.
just, I'll
Yeah.
just clarify, like, no, the example, say I said my dividend you pay to Mr. Bala, right? Let's say my dividend is 1,000 and let's say 20% or 10%, so 1,000 rupees is deducted. So what Mr. Bala will get is only 900 rupees check. And he's receiving on my behalf. So in my income tax, I am supposed to show my dividend income 1,000 rupees and supposed to claim TDS of 100 rupees.
But
Yeah, you're
sir,
absolutely right, because I am receiving the money on your behalf. That's all.
Exactly.
That's-
So
nothing else.
now to answer your accounting issue, from the company's point of view, a company is paying on behalf of Nikhil to Mr. Bala. So dividend payable to Nikhil, 1,000 rupees, 100 rupees TDS paid debited, and 900 when they are crediting the amount that is paid. So Nikhil's debt becomes zero from the company's point of view, which has declared the dividend. Is that clear?
and what would be the object behind it? Just I would like to understand how this situation would come and when. And what is the interest of the person would like to give the instruction to the company to transfer, because TDS is absolutely going on and TDS going to be deducted. So what is the object behind it?
Uh,
I don't know.
If
In my
can-
practice, I have never seen this is happening, but
uh,
I saw that how it
because
is being utilized.
Finally, if there is no saving in the tax liability, then the person.
Mahesh, to answer your question, let us say that you have got certain company share, okay, because you have purchased when you are actually in India, okay, and you have taken up a job in abroad, you have gone abroad, you have closed your bank account, whatever your ECS money is coming, you have closed your account, but company is declaring the dividend, but you don't have the repatriation facility on your dividend to receive that. So who will receive the money? So you authorize one of the person, okay, on my behalf, you pay the money to him. That's all. The company make the payment in India on your behalf to somebody. It is as good as payment paid. But in your income tax account, anyway, you have to fill it up the income tax account if you are in a taxable limit. If it is not taxable limit, it's okay. Money is not. Money is to be deducted if it is deducted. Because situation will come like that. Because
Balayan, another situation I can think of is like a partnership firm. Now, partnership firm is not a legal entity. So if they are acquiring share, it will be in the name of the partner. Now, if I am a partner, so there my name is there. So possibly firm will give instruction, you pay to so and so. And the PAN number of firm will be used. So they will get a credit. Money will come to me. So in the firm, it will be credited to my capital account as if I have received on their behalf. And that will take care of the tax issue. That's one situation I can imagine.
Even there is another situation if the registered shareholder is clearing member or stockbroker who are not exactly
Company
the
maybe.
shareholder.
Company can be a shareholder.
In that case, the declaration is received by the company under income tax rule 37BA2. So in that, this may be also be the situation where registered owner and beneficial owner is different.
Absolutely. Then another situation which is mentioned here is in case of demat, that depository or like particularly for foreign holders, they have in between some bank. They may be representing 10, 100,000 shareholders or shareholders. And then they submit that these are the people who are holding and total shares come to this. So that bank receives the money on behalf of all those shareholders and in turn they distribute to them. So it is a similar situation.
Yeah, these situations
Where the PAN number of those 100 shareholders will be utilized. So TDS credit will go to them. Bank will only facilitate receiving money and distributing to all of them.
Yeah, these are all only, facilitating regulations for which the thing can be done the way shareholders wants it. That's all.
Absolutely.
Otherwise, it is really the beneficial owner who's the person he is supposed to bear the tax, and even if he authorizes somebody, it is nothing but he only receives the money. It is only he authorizes somebody to receive on his behalf. That's all.
Absolutely. He is liable for his tax implications, whatever is there.
Correct.
Yeah.
Okay,
Sir, I
thank you,
think
Nikhil.
there is Mr. Nitin who wants to ask something. Maybe we can,
Yeah. Thank you.
Yes. Yes,
Yeah,
Nitin.
there are two instances. One is at the instructions when it is given, it's a different situation. And when the beneficial owner is registered, then
Yes.
everything will go to the beneficial owner. TDS will also go to the beneficial owner. But just if it is instruction to pay to someone else, the beneficial and ownership remains with the registered holder.
Absolutely
So the
right.
TDS and everything
Absolutely
will
right.
be to the
Absolutely right. I
registered
agree with you.
holder.
Absolutely right, sir.
So it was a very good discussion on practical aspects. Thank you, everyone. Let's move on. So yes, we were here. Now, dividend in areas on cumulative preference shares can be paid in a later year wherever there are profits to justify such payment. After paying the dividend on preference shares, and if there are any areas on dividend on cumulative preference shares, if there is any residual profit, that can be utilized for payment of dividend to equity shareholders. However, in case of participating preference shares, the holders of participating preference shares will also have right to participate in such residual profits, which will again depend on the terms of issue of such participating preference shares. So the order will be, dividend to preference shares, and then areas of dividend to cumulative preference shares, whatever profit remains will go to equity shareholders plus participating preference shares, depending on the terms of their issue.
Whenever the arrears are there in the cumulative preference share, there is always need to be a provision is made in the books of accounts. It should be actually there in the particular year. It is carried over as arrears. That is the accounting treatment which will be there. And it will be also appearing under the balance sheet under current liabilities and provisions. It will be appearing there as arrears of dividend. Yeah.
Also, dividend on equity shares shall be paid in accordance with the right of equity shareholders. In the event of where company has equity shares with differential rights, we have to consider those terms as well. Now, where a company issues equity shares with differential rights as to dividend, again clarifying the above point, terms of issue of such shares shall govern the rights for each such class of holders for receipt of dividend. Basically, for any kind of shares, company has to refer to the terms of issue before declaring the dividend, and we cannot forget the order of preference. Going on.
Just one comment in the previous slide. What Mr. Bala said about the first para, dividend in arrears on cumulative preferences can be paid in a later year where there are profits to justify such payment. I think it should be where a dividend is declared. Now, as an example, suppose on cumulative preferences, I have no profit. So 5 years I am not declared. In the 6th year, I have a little profit. Or I have, let's say, enough even to pay to the cumulative preference, but I don't pay. Company need not pay. The moment in the 6th year or 7th year, when they declare dividend, they want to declare dividend on equity shares, first they will have to pay to the preference shareholders. So even if there is a profit, I need not pay to the cumulative preferences. That's one thing. And what Mr. Bala said about that accounting, I beg to differ a little bit. In the earlier Companies Act, dividend was proposed dividend, etc., used to be provided in the same year. But now under the new Companies Act, having amended those Schedule 3, etc., now it's not a liability, it becomes proposed dividend becomes liability at the AGM. So it gets accounted in next financial year.
No,
So
I'm
similarly,
not talking about the declaration of the dividend. I am talking
no,
about
provision.
the
So
arrears.
if,
I am talking about preference share arrears. Because
arrears,
in the
correct.
current year,
So
you have a loss
Hmm.
because it is a pre-committed, which is a charge to the P&L account. So because it is actually payable, that will find the provision in the current year.
I have my reservation. I think if
That
I
is
have a
what I'm
loss,
saying.
I still need not provide for the
You see,
dividend.
what? Yeah.
Can I?
No. If it is cumulative, it's yes, it is. Yes, Sudhakar.
See, in case of cumulative preference shares, when there is no profits, if the company is into losses, no provision is required for that because there is no loss. So there is no question of declaration of any dividend. However, in case of cumulative preference shares, that gets accumulated automatically. what you have to do is in the contingent liabilities, you have to give a statement that on the cumulative preference shares, this much dividend is getting accumulated. That is only a notes to accounts. The contingent liability becomes a contingent liability. Because what is the contingency in this case? Contingency is as and when you get the profits, this payment is to be made. Number one. Number two, sometimes it may so happen, say for example, the dividend, the preference shares are to be redeemed after 10 years. For 10 years continuously, and these are cumulative preference shares. For 10 years, there is no profits. And the company is not in a position to declare and pay the dividend also. However, on the 10th year, the company is supposed to redeem the preference shares. The redemption of preference shares and your payment of dividend are two different aspects. 10th year, you have to redeem the preference shares, but that doesn't mean you can get away without payment of that accumulated dividend. Accumulated dividend is still payable even after the redemption of preference shares also. Only one case may happen when you don't need to pay the accumulated dividend is if the preference shareholders voluntarily, if they waive their right to take that dividend, then only you can do it. Otherwise, you cannot. You have duty bound to pay that dividend over a period of time, even if you have redeemed the preference shares.
Thank you, everyone. Moving on. Payment of dividend, very important aspect. Now, whenever the dividend is declared, within 5 days of such declaration, company shall deposit the dividend amount in a separate bank account, and company shall pay such dividend within 30 days of deposit in the bank account, or we can say within 35 days of declaration of dividend. Now, in the event, there's some unpaid dividend, it is transferred to unpaid dividend account and eventually transferred to IEPF, Investor Education Protection Fund. This particular provision is not applicable to government company where capital is held by central or state or government company or any combination of these three. So these provisions are not applicable to government company where capital is held by central or state or government company or any combination of these three. Now, manner of payment. Dividend shall be paid in proportion to the paid up value of shares. So say for example, on a 10 rupee share, only 6 has been paid up. Dividend shall be paid in proportion to that paid up value. Payment can only be in cash or through banking channels approved by RBI. So this throws more light on that bonus shares query. Dividend can only be paid in cash and not in any other mode. Payment in kind is not allowed. Where dividend is remitted through electronic mode, company shall send a member a statement in writing showing the amount of dividend which has been paid to the member. And where the dividend is not possible through any electronic mode, then dividend shall be paid by check or a dividend warrant. In the event of dividend amount exceeding rupees 1500, the check or dividend warrant shall be dispatched through a registered post. Now, more about checks and dividend warrants. The initial validity of such check and dividend warrant is 3 months from the date of issue. Now, if such check or dividend warrant is not encashed, during the initial validity, a fresh instrument can be issued within 15 days of receipt of request in this regard. The member has to request for a fresh instrument and company shall issue a fresh instrument with a validity of 3 months from the date of issue of such fresh instrument. In case the instrument is defaced or torn, a duplicate instrument can be issued on surrender of such defaced torn instrument. Now, in the event where a shareholder has not received a dividend warrant or the dividend warrant check is returned undelivered to the company can issue a duplicate warrant only after verifying the encashment status. Whatever fresh and duplicate instruments have been issued by the company shall be entered in the register of dividend warrants. Procedural aspects. In the case of default in payment, now dividend shall not bear any interest except in case of default in payment of dividend, or company has been unable to dispatch the instrument within the prescribed time period. This default shall not be considered if the dividend could not be paid by the reason of operation of law, or there were some directions given by shareholders regarding payment of such dividend, and such directions could not be complied with, and the same has been communicated to the shareholder. There is dispute regarding right to receive the dividend, or if the company has adjusted such dividend against any liabilities from the shareholder, or any other reason which was not due to default on the part of the company. The default shall not be considered in all the following cases. For the cases where dividend is kept
One
in
question has
abeyance.
actually come from One question has come from Pushkam Mishra. Exemption from transfer of amount is only to wholly owned government company or
Yeah.
otherwise also, please clarify. What exactly the question? Are you there, Pushkam Mishra?
Yeah, sir, I'm there. Can you
Yeah.
hear me?
Yeah. Yes, please.
Yeah, my point is whether this exemption to transfer this amount, the separate account, is only for those companies where 100% is held by Government of India, or even any other amount, maybe suppose more than 51% is held by Government of India, then also this exemption is available?
It should be 100% wholly owned by,
Okay.
by
Thank
the
you.
government. Yeah. Dividend in abeyance. So for the instruments, in an event where instrument for share transfer is received by the company and transfer is lawfully registered, it is very easy. Company can enter such transfer. Company can update their register of members and dividend will be paid accordingly. However, if transfer cannot be registered for any reason, for any dispute, any lack of documents, such amount will be transferred to the unpaid dividend account. Also, in the event of dispute in ownership, the dividend amount shall be transferred to unpaid dividend account. In the event of any prohibitory order passed by any court, statutory authority, any quasi judicial body, the amount will be transferred to unpaid dividend account. How to treat the unpaid dividend?
Go back to the slide.
Sir.
When you are saying this is the heading on dividend under abeyance.
Yes, sir.
Dividend under abeyance means it will not go to unpaid dividend account, because unpaid dividend account is actually the money which is not paid within that 30 days period. That will go to unpaid dividend account and the people will be able to draw the money. When you say dividend kept in abeyance, that means the money is actually kept in a suspense account separately, unless the ownership dispute is actually sorted out, or court gives the necessary prohibitory order lifted, etc. Till such time that money will be kept separately by the company till the dispute is sorted out. That is what it is actually abeyance. I think there seems to be some confusion, I think. Because see, in 30 days time, you are supposed to pay the dividend, which you are actually paying it. If 30 days time, some reason or the dividend doesn't get paid, then within 7 days from the end of the 30 days period, this is transferred to the unpaid dividend account. Normally what happens is the same account is renamed as unpaid dividend account. That is a practice. So that what happens, even after 30 years, 30 days, 60 days, 90 days, whatever it is, till the period of 7 years, people will be able to get the dividend from there. But dividend in abeyance is the separate matter where the dispute of ownership itself is there, or court order is there, some litigation is there, etc. So the dividend is actually kept unless receive the dividend.
Okay, sir. Yeah, thank you, sir. Now, how are we going to treat the unpaid dividend? The amount which remains unpaid within 30 days from its declaration shall be transferred to unpaid dividend account. Now, in the case of Nidhi company, unclaimed dividend may be paid by crediting the same to the account of member. The transfer shall be made within 7 days from the date of expiry of 30 days from the date of declaration of dividend. So let's discuss the timelines once again. Company declares the dividend, and within 5 days they transfer it to a separate bank account. Bala sir, please correct me if I'm wrong in the timelines, because there are a lot of timelines here. For 30 days, the amount which remains unpaid for 30 days from the date of its declaration shall be transferred to unpaid dividend account, and then such transfer shall be made within 7 days from the date of expiry of 30. After the declaration of dividend, within after completion of 30 days from the date of declaration of dividend, there is a time period of 7 days within which company shall transfer that amount to unpaid dividend account. Now, within period of 90 days of transferring such amount to unpaid account, company shall prepare a statement containing the names, last known addresses, and amount of dividend to be paid to each of the members. Such statement shall be uploaded on the website of the company, and if also on the portal specified by the central government for this purpose. Such statement shall remain on the website of the company till such unpaid unclaimed dividend is transferred to IEPF, and the company will keep updating this information. Any person who is claiming to be entitled to any amount transferred to unpaid dividend can apply to company for payment of such amount. About IEPF, Investor Education and Protection Fund, any amount which remains unpaid or unclaimed for the 7 years in the unpaid dividend account, along with the interest accrued on such dividend, shall be transferred to IEPF. Such transfer shall be made within 30 days from the expiry of 7 years from the date of transfer to unpaid dividend. Any claimant of dividend transfer to fund shall be entitled to apply for refund from IEPF. There's a prescribed procedure for the same, and the person who is entitled to receive such dividend can apply to IEPF. Now, before transferring any dividend to IEPF, company shall give an intimation to each of the members in respect of whom such unclaimed dividend is being transferred at least 3 months before the due date for such transfer. After the 7 years have been completed, before completion of 3 months before such completion of 7 years, company shall intimate to the members, to the last known members for such unclaimed dividend, and if anybody wants to claim that dividend, they can claim it, and after completion of 7 years, company shall transfer such amount to IEPF. With respect to IEPF, company has to comply with few things which are in this slide. Company shall send a statement to IEPF authority in the prescribed form containing the details of amount transferred, the unclaimed unpaid amount transferred to the fund, and company shall get a receipt for the same. This statement will be furnished within 30 days of transfer of dividend to IEPF. Company will maintain a record of persons in respect of whom dividend is transferred to the fund. No fund shall be transferred if there is a specific order of a court or tribunal or any other statutory authority restraining such transfer, and details of such such fund shall also be furnished to IEPF. Now, at the end of each financial year, within 30 days of the end of each financial year, company shall file a statement with IEPF authority, and which shall contain the details of all unclaimed unpaid dividend due to be transferred to the fund in the next financial year. Disclosure requirements. Company shall disclose the following in notes to accounts: aggregate amount of dividend proposed to be distributed to equity and preference shareholders for the financial year, and the related amount of dividend per share. If there is any area on fixed cumulative dividend, that shall also be disclosed in notes to account. In balance sheet, company shall disclose the amount lying in unpaid dividend account together with interest accrued on that amount will be disclosed in the balance sheet. Board report shall contain the amount of interim dividend paid, if any, and the final dividend recommended by the board. In the annual report of the company shall disclose the amount lying in unpaid dividend account in respect of last 7 years and the time when such unpaid dividend is due for transfer to the fund. Also, if any amount has been transferred to the fund during the year, shall also be disclosed in the annual report. There are few additional compliances for listed companies. All the equity shares allotted by company shall rank pari passu with the existing equity shares for the purpose of payment of dividend. The company cannot issue any shares with superior rights as to voting or dividend. Listed company cannot issue any such shares which have superior rights. Now, the listed company shall give a prior intimation to stock exchange about the board meeting in which dividend is proposed to be recommended or declared. Recommended in case of final dividend, declared in case of interim dividend, at least 2 working days in advance. And those 2 working days shall exclude the date of meeting and date of intimation. Also, the company shall intimate the stock exchange the record date fixed for the purpose of payment of dividend at least 7 days in advance. Again, those 7 days shall not include the record date and the date of intimation. Company shall recommend declare the dividend at least 5 working days before the record date.
Geetanjali,
Yes,
I have one small clarification I would like to seek from Sudhakar as well as Hema. I don't know. Now we are talking about the record date. We used to have 2 things. One is actually the book closure period and also the record date. Company normally used to have the book closure period, spreading over certain intervals. And you have the option of the record date also. Is today both are prevailing or it
Sir, now record date is
is
prevailing.
only a record date? Because since your slide says only the record date, I'm just asking this.
Sir, since transfer
So
of
book closure is not there now.
so the record date is prevailing, sir.
Okay. Yeah, go ahead.
moving on. Details of outcome of board meeting, which was held to consider the dividend matters. Details of such board meeting shall be disclosed to the stock exchange within 30 minutes of closure of the meeting. In case of recommendation or declaration of dividend, as the case may be, intimation, as to date on which such dividend shall be paid, or whenever the dividend warrant shall be dispatched, or both shall be given. In case of payment of dividend through warrant check, if any amount exceeds 1500, company shall dispatch such instrument by speed post. We have already discussed this. Company shall declare and disclose dividend on per share basis only. Company shall not forfeit unclaimed dividend before the claim becomes barred by law, and such forfeiture, if effected, shall be annulled in appropriate cases. The top 500 companies based on market capitalization as on the end of every financial year shall formulate a dividend distribution policy covering the prescribed parameters by SEBI. Such policy shall be disclosed in the annual return of the company and will be placed on the website of the company. Company shall also disclose in its corporate governance report the dividend payment date under the general shareholder information section. Now there is an adjudication order passed by registrar of. Yes,
Geetanjali,
please.
Geetanjali, I would also like to briefly touch upon few more compliances which from the purview of the listed company. First of all, when interim dividend is declared, the audit committee will also review the financial statement. So that is one aspect. Secondly, declaration of dividend is unpublished price sensitive information. So the information about the declaration of dividend amount and everything, that information is to be shared within the listed company on need to know basis, as well as the information, passing of the information within the organization also need to be entered in the structured digital database of a company. Okay, then there is a circular of 28th April 2020 wherein it has been provided that reconciliation has to be done by the listed company with the banker on quarterly and fortnightly basis as may be applicable. So that need to be taken care of by the listed company. Further, with regard to adjustment of dividend payable with any dues from the members. See, in case of listed company, only the amount which is due from any member as in his capacity as a member can be adjusted with the dividend. However, in case of a private company, any other amount due from the member can be adjusted, but only in case of in capacity as a member can only be adjusted in case of listed entity. Further, with respect to after the process of declaration of dividend, the RTA provides us the benefits of the shareholders who are entitled to receive dividend on the record date. From a company security point of view, we need to bifurcate the shareholders on the basis of their categories such as whether they are resident, non-resident, their tax slab, and tedious withholding need to be done on the basis of the criteria which are there as per the Income Tax Act. Then there are means of dispatch. First preference is through the electronic means, and in case the electronic means are not available, then the warrant can be used. In that case, also speed post or need to be done for rupees 1,500 and more. Then there are IPF, but since IPF is a very vast area, I think you would be covering. So maybe. So this I wanted to.
Somebody has put up a question here. I think the same thing more or less what I asked. Is it necessary to have a book closure date ending on the record date?
So I think this has already been answered when Bala sir asked about whether book closure date exists or the record date exists.
Because nowadays we also see the record date only. We don't see the.
Sir, it is like this till the time the physical transfers were permitted.
Yeah.
The book closure concept was there. Now what happened is that whenever the transfer is taking place, also that is off-market transaction. So once the transaction takes place, you have to go to the DP account. You have to open the DP account, submit the transfer form to the DP. The company will transfer your shares and credit in the demat account only. There is no physical transfers are permitted now. Because of that, the concept of book closure is no more there. Concept of only record date is there.
Okay. Yeah. Okay. That is why I also wanted to take this clarification. And somebody said now dividend distribution policy to be formulated by top 1,000 listed entities effective from 5/5/21. Yeah, this is for the information that is right actually. Yeah, that's right.
Sorry, I have again lost my slide.
Okay, no problem. Go back.
Yeah. So there's an adjudication order passed by ROC underlining the importance of dividend. What happened that company after declaring the dividend failed to deposit the same within the stipulated time in a separate bank account, which is a violation as we have already discussed. So the company directors and the company secretary each were penalized with rupees 17,000 each for the delay of 7 days in transferring the amount.
10,000 rupees each, 1,000 rupees per day, 7 days, 7,000 rupees. That is how the calculation is actually come. More the number of days, 1,000 rupees per day gets added. And you see here the company secretary is also there, which he has to bear from his own pocket. So you see the cost of non-compliances, which is actually coming over here. One thing. One more thing is there, you also said within 30 minutes of the board meeting, the results should be announced to the stock exchanges, which means it brings obligatory to write the end of the board meeting time recorded, which is also there automatically. So a lot of things are there, intricacies for the company secretaries who are there. You have to take care. That is the bottom line. I am getting it. Yeah.
Right, sir. Right. So that would be it from my side. Thank you for being such amazing listeners, everyone. And thank you, Bala sir, Sudhakar sir, Hema ji for their valuable inputs. This presentation has been a result of inputs from all three of you. Also Hiral, who is not actively here, but always supporting us. Again, if any of you has missed any of our webinars, you can access them on our YouTube channel, Decoding Corporate Laws with Mehta and Mehta. I'm reiterating, you can also follow us on LinkedIn for latest regulatory updates and information on all our upcoming webinars. Thank you very much. We are open to queries. Also, your feedback, if any, your feedback always helps us to improve. Thank you very much.
On query has come. We are clear all the query. This is the last query, which is
Last is there, yeah.
Can we pay interim dividend? Oh, what? 1 minute. Can we pay interim dividend from the amount transferred to the general reserve with the NCLT approval? I believe Vedanta Limited is doing something similar. Anybody? Because I'm not aware about this.
To my knowledge, with NCLT approval, it can be done.
Okay.
Because see, what you will be doing at that point of time is you are transferring the money from general reserves to the reserves, and then you can go ahead with that. With NCLT approval, it can be, but you have to give sufficient reasoning to NCLT to approve that particular transaction.
Okay.
There's one more query we have.
Yeah, for private company too, record date is no more there.
Sir, I think it is about that book closure date and record date.
Yeah. I think now everything has actually come. It has to be in the demat, and that's what I believe actually. Because law made it, no more.
No, sir. I think no. Private companies are exempted from that.
Okay.
So private companies, if the private companies, the more number of shareholders are there, they can continue with the book closure concept.
Okay. So that means private companies, demat is not made that compulsory.
Not mandatory.
Not mandatory.
It's for public companies, or unless listed or unlisted.
Okay. That is all. I think that brings to the end.
Yeah.
So I must definitely express my thanks to Geetanjali. She is well prepared, and not only that, very precisely, she has adhered the timing also. We are actually 15 minutes earlier than what we are actually scheduled. That is one. And great learning from panelists for me, because in fact, really, I keep continuously in the learning process. So there are certain things which I had in today's life. That's what I said. Youngsters are all more updated than, because this I always had a doubt whether the record date and the book closure, etc. Because in our time we used to be book closure, of course. And it was a good interaction with the people also who participated, especially Nikhil, Magesh, other people who rise and share their experiences, etc. It's a really good learning. So I wish to take an opportunity for expressing my thanks to Hema, Sudhakar, Geetanjali.
Hello.
Thanks a lot. I think this brings to the end of the session. We'll meet in some. Yes, please.
Nikhil, thanks for participation. Nikhil is always very active participant. He handle our all participants query also. He's a CSCS, my MSOP batchmate.
Okay.
No need to thank. We are part of one family, and I always love to share my experience with others.
I think
Hello.
Nikhil
Nice
gets
to hear.
5 stars in terms of participation and being an active listener.
So as and when he's there, he will be sharing his experience like anything. Many times people, literally like take legal opinion from him, but he doesn't mind that. Okay. Thanks everyone. Thanks Sudhakar, Mr. Bala, Geetanjali and Hema, all of you and all participants. And I will request if Sudhakar or Ms. Hema has to say anything, otherwise we'll close this session.
No, I don't have anything, Dipti. Thank you.
Thank you.
We
Ma'am,
can say
I
thanks.
just want
Thank you very
to-
much.
Yeah, please.
I
Please,
just want to thank you all for inviting me here. It was really a knowledge gaining session for me also, because though we have read SS3, but the interaction which take over here and the things, the practical aspect which Sudhakar sir and Bala sir said, really it was also for me to learn. So thanks, ma'am. Thanks, everyone. Thanks, Geetanjali, for such an excellent presentation.
Thank
Thank you.
you.
Thank you for the
everyone.
inputs. Thank you very much. One thing, Hetal has requested to keep a session on RPT.
RPT.
So yes,
We will take
so
care.
maybe we can.
Announcement I would like to make actually here.
Yeah.
Although we started in the first slide, you might have seen that this month is being a secretarial standard 1, 2, 3, 4. Some or other next week, the panelists who are invited for the SS4 due to the unavailability, we will not be having this SS4 as per the schedule next week. Probably that will actually come up in the subsequent week, which I thought I should inform you.
Or if we are planning other session, let's say we have not yet worked out, so we'll come back to it. Okay.
Yeah, if there is any other thing is planned, we will take it out. Otherwise, the SS4 will be taken up in the next week, somewhere during the first week of March. Yeah.
Right.
Okay. Thanks a lot. Thank you.
Thanks, Arun. Thank you.
Thank
Thank
very
you,
much.
everyone. Thank you.